What's going on, everybody? I hope you guys all had a great weekend. Doing my weekend market wrap up video here. So, Sundays is the day where I like to, obviously, now that football season has started, obviously get some games in, relax a little bit with the family, kind of chill out. And then towards the end of the evening, start to, dive into the charts and kind of see what we're looking for heading into this week's session. So, just to kind of get started here, I'm going to go over the indexes first. Number one being the triple Qs, which is obviously a lot of the stocks that I play here. So definitely some downward action on the triple Qs. On Friday here, you could see here we had this double top here, highs of 382. And then we had this big red bar here, obviously losing the 5 and 10 day moving average. So one thing that we're going to really need to look for is we do have a little bit of room here down, maybe a point and a half to the 20-day moving average, which is going to be about $375. That's this purple line here. Right now, as it stands, futures are up about 26 points. Again, I don't like to play too much into futures coming in off of the weekend, especially when we had such a little bit of a back test here. I would not be concerned about an overall market sell-off or big major corrections, but the market is tired. Okay, it does look tired. And if you're one of these people that you believe that your stock is going to the moon and everything has to go up and every day, constantly looking and pushing for a stock that's going to the moon, and you don't want to believe that stocks take a back test, you can get your face ripped off and everyone is, going to be looking at you like you're a clown, basically. This is not fantasy world. This is a stock market. Things go up and things go down. Right now, the market seems very, very, very tired, that it needs a rest. So have we been getting that rest? We have been getting that rest the past couple of days. So a couple of things that I really want to look for here on the triple Qs is going to be a back test here of this 375. If we do get any sort of breakdown below 375 here, I would look for 373. Obviously, any close under 373. This is the major level that we're going to need to watch here, which is this red line on my screen. It's the start of the whole breakout on the triple Qs, which is the 50-day moving average. You can see going back here to May, as soon as we broke out, we've been riding higher since May. So anybody right now that wants to say, that the market has been this, that, and the other, the market's been riding up for months now. So, a little healthy back test would be fine. Nothing wrong with that. So if you are a trader, whether you're a scalper, a swing trader, a day trader, if you do not trade both sides of the market and you are completely, long biased, maybe you kind of want to sit out right now. But if you are a trader, meaning that you trade the markets, whether we are going long or whether we are going short, there is a lot of potential in some stocks to the short side. There's also stocks with potential to the upside as well. So do not get, don't think that just because the market's going to take a little bit of a break, that means that everything is a sell. Okay, there's still going to be setups to the long side. However, a lot of stocks are going to be back testing support. So if we can see here this big consolidation period that we had here, really from the middle of July all the way through the middle of August here, this is an area that I could see us back testing. Okay, this white trend line here. Why? Because multiple touches here, a lot of consolidation before we broke down and then ramped higher. So why do I want to see us come back down and test this level? This is going to also correlate with the 50-day moving average. So if we do, let's say tomorrow, we get a bit of, a gap up tomorrow when the market opens, just be cautious of going long, especially within that first 5 minutes, 30 minutes, an hour of the market, because we could gap up, get rejected at the 5 and 10 day moving averages, which would be about 379, and then start to fall back down. So I would not be completely sell biased until we lose the 50-day moving average. I will be short-term sell biased on some particular stocks if we start to lose a 20-day moving average, okay? If we lose a 50-day moving average, more so, swing trades to the short side until we kind of find a resting bottom and then kind of play those dip buys back up. That is taking a look at the triple Qs. Let's take a look at the SPY. SPY also looks the same way here. We did lose the 5-10-day moving average. However, on the SPY, we did lose a 20-day moving average. So on The SPY, I would be looking to test this 440 to 441 area, the 50-day moving average. Let's see. Let me take off some of these old trend lines here now that these are completely irrelevant. But let's look to test this 50-day moving average here. We do have rising support on the linear regression line. If we look at the diamonds, the Dow has already lost the 50-day moving average here. You can see on Friday or on Thursday of last week, obviously we broke through, tested it on the lower Bollinger Band, kind of had a little bit of a spike up and was rejected at the supply, and then finally broke down here. So let's see what the diamonds do, the Dow Jones does. Do we continue to hold this level, kind of tread sideways and then come back down and test some further levels, or do we consolidate sideways and start to curl back around? So just going through my watch list here, just a brief overview. Peloton is a stock that has been strong. What I would like to see on Peloton is a little bit of sideways consolidation on Peloton, and then a break of 120.68. Obviously 120.68 is going to give us room to 128. I do not want to see such a harsh move tomorrow, Monday, continue higher, because then we're going to be, really far extended here, and then that snapback into rising support is going to be a lot more violent. I'd like to see maybe perhaps an inside bar day, kind of trade around sideways for a couple of days, and then to the long side. So if you're looking for a stock to the long side, add Peloton to your watch list. This trade does not have to come tomorrow or this week. Let it play out here, but obviously the 120 line is what we are looking to break, and then test 128. Let's take a look at Zoom. Zoom is also another stock that I want to kind of watch to the downside. We had this big gap down after earnings. We've been consolidating sideways. We did get met at the 10-day moving average here. So what I'm looking for on your chart, so you guys can kind of follow along, is I'm looking for a reclaim of the 10-day moving average. That's always the start, the birth of the trade. So if we can get a close over the 10-day moving average and a reclaim, potentially we're going to have a little bit of room to the upside, potentially to 320. So there would be a little short-term trade there. Nvidia also looks like it's forming a little bit of a bull flag here. Let me take this old trend line off. Has to do with an older trade that I was in. Nvidia has been a stock that's been extremely strong. Semiconductors, however, look weak, but there has been a lot of out of the money call buying on Nvidia. 240, 245 strikes for 2-week expiration and next month, October expiration. So just keep that on watch here. Retesting highs of 230.43. Obviously, if Nvidia gets a break over 230, this thing is going to really stretch. So maybe a potential swing trade to the downside, we would be looking at a 221 loss. Rising support on Nvidia would be about 217. AMC, we would be looking to take out this 52.87 here to get a push higher into the next supply zone of 59. So we have to see what AMC wants to do. Obviously, support is resting here around this $46, $47 range. Definitely want to keep an eye on AMC. Netflix has also been another stock that has been extremely strong the past, really going on 2 weeks now. Is forming a little bit of a bull flag here. Did close below the 5-day moving average. We do have support at 586, so that is a little bit of room down. You don't just want to get caught here in the middle to have this back test, this 10-day moving average here. So what I would be looking for on Netflix is obviously to take out these two channels here, 609, 610, to retest highs of 615. Until it does that, I'd kind of stay out of the way of Netflix, let it do its thing. If it wants to come back down and back to support 587, I would take a stab at trying to bounce this off of support here. Take a looking at Facebook. Facebook to the downside here. You can see a little bit of this reversal candle here. We are resting on the 10-day moving average. So if the market continues to want to take a breather, if we do lose the 10-day moving average here, 377 area, we do have room to come down here into the 371 area. That would be the 20-day rising support. Definitely look for a short-term trade on Facebook. So just to kind of recap so far, we have Peloton to the upside that we are watching, Zoom to the upside, Nvidia to the upside, AMC to the upside, but we kind of want to let it do its thing. Netflix, we kind of want to stay out of its way until it either A, comes back down and test that 10-day support, or it starts breaking the levels to the top side. Let's take a look at Starbucks really quick. Starbucks did get this breakout over this consolidation here. Tried to make a push higher. We do have room into the 122.70s. However, a little bit of reversal candle here with the market trying kind of, bleeding off towards the end of the week on Friday. If it wants to lose this level, it does have support here at 118, so possibly look for a bounce buy here at 118 for a little bit of consolidation back up to the upside. Just taking a look at Airbnb. Airbnb has been, I traded this 2 times last week. One for a break even, lost a cup of coffee, and another one for about a 1.5 move on it. Extremely choppy action, and the spreads are very, very wide on Airbnb. It's kind of more of a swing trade. And I like it more for a longer term swing trade, maybe 3 to 6 months out, maybe even 6 months to 12 months out. But it has been making moves up ever since we came off these bottom lows, this double bottom low here, going all the way back to 519 and 715 here. We kind of hit this area twice, found a little bit of support, and has been treading up sideways. What I would be looking for here on Airbnb is maybe a 159, 160 back test. If we can get back down here into the 150, 160 back test, I would be interested in picking this up for a long-term swing trade. Obviously, to the top side, it's a little bit shaky once you start buying Airbnb just because of the spreads and the choppiness in the way that the stock trades. But that 170 break is going to have room to 173, and obviously any close over 173 is going to be extremely, extremely bullish. AMD is another stock that I'm watching to the downside. So just to kind of recap, part of the semiconductors here has been fading off here. Big move after earnings here, kind of was consolidating, back testing support, try to make another run up here, was rejected, and now has been selling off again here. So what I would like to look for on AMD, anything below 104.89 would be coming down here to 103.45, and the 50-day moving average, which is 101. So if you're looking for a trade to the short side, definitely want to add AMD to that watch list to the short side here. If we believe in my theory that stocks trade from supply to supply and demand to demand, then we would assume that once we lost these supplies here, we are coming back down to the next demand, and that is 103.25. And if we lose this demand zone, the next strong demand zone here is at 101.70, which is a 50-day moving average. Same thing with DraftKings. Big move up here, started to consolidate sideways. We have been rejected at a double top 2 times. That double top is correlating with the linear regression channel 50 line. Guys, technical analysis works. There's a reason that this stock has stopped here 1, 2, almost 3 times. So we have been getting rejected at this area. So if you did not have this linear regression line on your chart and you're kind of wondering why hasn't DraftKings broken out, well, that's because we have a pretty strong area of supply right here. Obviously, any break of 64, 68 could take us to $66 and 66.5. But right now it looks like DraftKings wants to come back down. So if you're looking for a short-term trade here, we have 1, 2, 3 channels here. If we were to lose this whole channel here at 62.50 could take us to 61.70s, and then obviously anything below the 10-day moving average, if the market wants to continue to take a breather, we would be coming down to test this 58.5 area. This area has acted as resistance in the past, so it could act as a new form of support, which would also correlate with the 20-day moving average. Microsoft, also want to watch this to the downside. Microsoft, if we draw another trend line here, if we start to lose this 295.32, you can see here we've already lost the 20, the 5, and the 10-day moving average here. If we believe that stocks trade from supply to supply and demand to demand, the next demand zone on Microsoft is 289, 290. That would also correlate with the rising linear regression as well as the 50-day moving average. Look for Microsoft to come back down here. It's been on an insane move ever since June. We came off lows in June at 239.5, and this stock is trading at 305. Nothing wrong if the stock wants to come back down and test this 50-day moving average at 289, 290. Let's also take a look at a couple more stocks. Apple. Okay, Apple did have some news on Friday. I don't think the news is that significant. Okay, I think that this is just the start of, telling the rest of the market that it's time to take a little bit of a breather. It did lose all of the moving averages here, the 5, the 10, the 20. 50-day moving average here is at 147.64. I would expect more downside on Apple before we get any sort of reversal here. You can see all of this sideways consolidation here is going to act as a pretty firm level of support. That's also going to correlate with the 50-day moving average, SMA, as well as the EMA and the linear regression line. So lows on Apple would be 145. Obviously, we would be looking at 147.5 as well as 147 first. Possibly this is going to be a scoop and score for a swing trade here off this 147 to 145 zone. I think anything in this area would be a pretty good area to scoop it up, let it consolidate sideways, and then swing that to the next leg up when the market wants to ramp up heading into the fourth quarter. If we do take a look at Amazon as well here, let me zoom in this chart. Amazon as well, insane move coming off the bottoms here at about 3,200. All the way to highs here at about 35.50. Did have room to stretch here on the upper Bollinger Band to about 35.85 as well as 3600. Got rejected 2 times, double top here. You can see came down, and now we are resting on the 50-day moving average as well as the rising 10-day moving average here. So any loss of the 50-day moving average could be the start of a little bit more of a consolidation and back test on Amazon. So definitely one of the levels that we want to watch for at Amazon is losing the 34.64. So if you're looking for a stock to play to the downside, let's keep an eye this week and next week on Amazon. If we do lose the 35.65, we do have room to come down here to the 34.44. Big potential trade there. And obviously Tesla, either you love it or you hate it. We've come up 1, 2, 3 times. We're rejected at the 764 area. This level was huge. Any break over the 764 area could have catapulted us into that 780s, 800. Looks like Tesla wants to come back down and test this rising 20-day. 722 would be the price target I have in mind here. I'm going to draw a trend line here. This is going to start to get choppy with Tesla just due to the fact that this old resistance here around the 730, 735 area was acting as old resistance. Is Tesla going to turn this into new support? So one thing to keep an eye on here, okay, one thing to keep an eye on, if the market wants to gap up and we get this sort of fake out, bull rally, you could see Tesla get a bounce off this 730 area, get a push, and then get rejected one final time before it comes back down to back test 720 and even come down here to 692. Obviously 692 is a 50-day moving average. Definitely something that you want to keep in mind with Tesla. So Tesla, I am looking to the downside for sure. Price target of 722 to the downside. I don't really want to play the quick gap up bounce on Tesla just because of the volatility. It does move extremely, extremely fast. And if you are not quick or on the right side of that move, you definitely can get caught. One last stock that I want to look at is Boeing BA. Boeing, we have a bit of a bottom range that's forming here, 210.35. I think that we do have some more room to the downside here. We did have previous lows at about 206, 205. I think that if we came down a little bit lower and we lost this range here, if we lose this 210 range, we do have room to come down to 206. I think we can get that back test of 205. Obviously, I would like to see us hold this 205. If we do lose the 205, we do have more room to slide to 192. So we definitely want to keep an eye on Boeing to the downside as well. One stock that looked okay to the top side was Disney. Okay. If I make this chart a little bit bigger so we can see here, Disney has been rejected here at this 187, 188 for quite some time now, just about over a month and a half, a little bit longer, going on 2 months. You can see we get these tails that we come up here. We touch this 187, 188 area, and then we continue to get rejected. So we got rejected. We are down here at the 5-day moving average, 184.14. If we do lose 184.14, we have some room to slide to 183, 182, as well as 181. I think that if it comes down to 182 or 181, definitely would be an area to kind of scoop this up on a bounce and play it for that, I don't know, how many times? 1, 2, 3, 4, 5 times to see if it can break that 187, 188 area. Definitely want to keep an eye on these stocks. Again, like I said, don't have such a long bias. The market does look tired. It does look like it wants to backtest. Do not be faked out with a gap up tomorrow. Futures are continuing to ramp. They're currently up 37%. So if I can put my finger on it right now, I would say that pre-market, it continues to rise. when the market opens, it would look like we're going to gap up. Stocks are going to get that initial push higher, and then they're going to stop. When you think that they're going to continue, they're going to stop, and then things are going to slowly start to fade back down as we continue to back test some of these lower levels of support. However, there is stocks that are showing, some potential for upside. Peloton is a stock this week that we need to watch for continued momentum. AMC is always a stock that you need to watch for continued momentum. Nvidia, just because of that out of the money option flow, but definitely a stock like Netflix, you want to let it do its thing unless it comes back down and back test some rising support, possibly play that for a bounce. Facebook to the downside. Starbucks looks okay to the top side. One more stock here, that is a potential swing. Visa highs 252.67. We've been selling off a little bit overextended, I would say, on the daily time frame. We are coming back down here into this 200. I believe that, this is a 200 simple moving average here. I'd like to see it come down just a tad more. Right now, 224.91. I'd like to see it maybe 223 or 222. I think right here in this 222 zone, you can see this yellow line here, the 200. We have lost it on multiple occasions over the past 10 months, but it's very short-lived. And anything below the 200, once we get back up, it starts to sort of ramp. So I think that we are a little bit overextended to the downside on Visa. Let's look for this 220 to 222 range. If we get down here into that 220 to 222 range, I think it's a great even I would say 60 to 90 day swing trade on Visa back to the upside around that 220 to 222 range. Guys, I hope that helps you guys. I will be free to answer any questions, comments, concerns that you guys have in the Discord. That Discord link is down in the description box below, completely free to join, as well as the website, kind of showing you guys how I trade these channels and use these supply and demand zones. My website can be found in the description box below, but I will catch you guys all on the next video, and let's have a great trading week, I think there's going to be a ton of opportunity both to the long side as well as to the short side.